Good morning and God bless. Welcome to the Front Page Saturday Town Hall Edition. So glad you could stop by today. Our topic is forbearance versus forgiveness. Are the banks doing their part in the COVID recovery? And what can you as a homeowner, mortgage holder, business owner do to help yourself and whether the storm maybe come out ahead of the game? That's what we're focusing on today. Can't wait to hear from you. Please call early and call often. That's the key to getting on the front page any day of the week. 520-KJLH, 520-5554. Then you add your area code, your 323, your 818, your 562. I want to thank our partners in this. Our Saturday Town Hall Edition is brought to you by the Independent Professionals Association. You can find online at indiework.org, the great city of Los Angeles, Community Build, and the county of Los Angeles. I'm Dominique DiPrima, and let's get right to it. Joining us to kick off our conversation this morning, a real estate broker, realtor, luxury home marketing expert, also an accredited staging professional. And she's got a lot of experience working with income property, short sales, foreclosures. Pila Gray-Jessie, good morning.
Good morning. How are you?
Great. It's great to have you on. Of course, I feel like it's a cliche, but I'm going to say it anyway. These are unprecedented times, and a lot of crazy things are going on, I'm sure. For mortgage holders, for the I guess you want to say the mom and pop, not the big corporate mortgage holders, but the ones in our community, what trends are you seeing right now?
Well, for the mom and pop, I am seeing some struggles that are starting to happen with people paying their mortgages. It may not be apparent on the MLS or on the open market, but if you look at the pre-foreclosure websites, we are seeing an unprecedented number of people beginning to miss their mortgage payments, which naturally is concerning. The banks are making some attempts to work with people, but the challenge that no one wants to talk about is if you can't pay a $3,000 mortgage this month and next month and the month after that, how are you going to pay $9,000 come January? Some banks are allowing people to put these mortgage payments on the back end of their mortgage, meaning at the end of the 30 years. But a lot of them are structuring repayment plans, which may or may not be realistic for the average person if they've lost their job or they've seen a permanent reduction in income.
Right. And I mean, some of these markets in South LA, I guess, really what I'm thinking of, but it could be anywhere in the country, is where black people are, especially, they're already under some kind of pressure about gentrification. And people are concerned that we will wake up from the pandemic and we, meaning black people and Latino people to an extent, won't be owning property anymore in our communities.
Well, yes, that is a real concern among a lot of people in the community. I can't necessarily attribute all of that to COVID-19. I mean, what we have is we have extremely low interest rates, and we have gentrification. A lot of people who have historically lived outside of what is now the black community, Inglewood, View Park, Windsor Hills, and Mark Park are coming back in for ease and convenience of the commute, which is great. Everybody can finally live together and everyone can get along. The challenge is that unfortunately, for African Americans, historically, we make less money. We have less money saved. So when it comes time to try to buy into these neighborhoods, we are less able to compete with our counterparts. And the prices are going up so fast, so quickly, that if you're unable to compete today, interest rates are in the twos. Tomorrow, when the rates go up to the threes and the properties are $100,000 more, our chances of getting, into these neighborhoods again is even slimmer. And, there is a lot of controversy in the African American community with quote unquote selling out, which honestly I think is kind of ridiculous if we look at the grand picture, right? Number one, what a lot of people who have historically lived in these neighborhoods who are concerned about African Americans losing home ownership is they get upset when a person who traditionally comes out of the community and purchases into, an area that traditionally had been African American. But if you really look at what they're asking, if you receive an offer that is exceptionally higher than the other offers that you may receive from the African-American person. You're asking the person in that house to take a lower offer just because the person is black, which is illegal and not something that we can do, and not really, it's just not something that's a good idea. Ultimately, we have to be fair, we have to be equitable, and naturally the homeowner is going to want the highest price for their home. I think what we may want to do to try to equal the playing field is, come up with some programs and come up with some ideas to allow all people from all communities, African American or not, who may historically not be able to afford the higher prices, to be able to purchase in the communities that they live in. That way you can be fair to the people who want to come in, who historically didn't live there, and you can be fair to the people who can't normally afford to live there to buy. And I really think that we need to look at programs and options and not necessarily focus on discriminating against people who want to come and live wherever they want to live, which is what we've fought against forever, right?
Right. So what are you seeing right now with the market? Has it tightened? How are the banks even lending right now? If people, people are trying to get in, and I mean, because you mentioned, and I've heard this from a lot of homeowners, how they're dealing with the mortgages. We'll get into that more later in the show, and how to deal with it if you are a homeowner. But what are you seeing in terms of, that interest? I mean, you talk about anyone can live here. That's another show for another day.
Right.
But, because, I think that's fine as long as you're not pushing people out. But it seems like historically we do get pushed out. But just about, the conditions right now, what are you seeing in the market?
Well, when COVID-19 initially, when we first went under the lockdown, the banks really, really tightened up because they were very concerned about, people being able to pay their mortgages. It was, unprecedented time. No one knew what was going to happen. A lot of institutions raised their FICO score requirements to get loans. They raised their down payment, which obviously priced a lot of African-American people out of being able to purchase property. But as of right now, there's FHA program is still available. If someone wants to buy a home and they only have 3.5% of the purchase price to put down, that is still available. It has very good terms, great rates. Your FICO score doesn't have to be amazing to get the payment. There are some changes that have happened that I don't think are going to work in everyone's best interest. There are some banks, interestingly enough, that refuse to count rental income if a mom and pop owns, an income property. If you are a person who owns a property, a duplex, triplex, and you want to buy a house, and you have that 3.5% down that you've saved and you're ready to move on, there are some banking institutions right now that refuse to count the rent, which means that you now have to qualify to make the mortgage payment on the income property, even though you're receiving rent from the tenants and a new house, which is making it impossible for some of my clients to purchase, or we have to go to different lending institutions to try to help them obtain mortgages. In
that
terms
doesn't
of
seem
luxury
fair because the
market,
tax man counts it.
that absolutely they count it. Absolutely count it. Absolutely. But these are the banks trying to hedge their bets because of the whole, the policies that have come about that prevent tenant evictions right now due to loss of income from COVID-19. Banks are predicting that we have not seen the lasting impacts of it, and they're concerned about loaning money to a borrower who may not be able to pay their home mortgage because the tenants in the income property stop paying. So whether they're paying or not, the banks, some banks, not all of them, not all lending institutions, are basically saying, we're going to assume that your tenants are going to stop paying you. And because of the laws in place, we're going to assume that you won't be able to kick them out. So we don't want to be in a situation where you can't pay your mortgage payment because you're trying to hold on to this income property that you had first. So we're going to make it a little bit more difficult for you to get this property.
Wow. Honestly,
or guarantee that you can pay both mortgages.
I mean, honestly, it seems like from what I'm hearing, and maybe this is just one-sided, but it does seem like this is everything sort of penalizing the homeowner. I mean, the banks, even an eviction moratorium, which I think, yes, you have to do that. You can't kick people out on the street. But that, to me,
right.
It's almost like we're asking the small mom-and-pop homeowners to do what the safety net is not doing for the community.
Absolutely. Absolutely. I agree. I definitely agree with you. But you have to remember that the banks are still shell-shocked. from what they went through. And I'm not saying that it's right, and I'm definitely not taking the bank side, but, the banks are still shocked from what they experienced in 2007, 2008. And they're trying to make sure that they have protections in place because we haven't seen the long-term lasting effects yet of this pandemic. There are people still who are going to lose jobs and lose income, or people who are struggling to make it right now and make ends meet, make their mortgage payments, who haven't lost their homes yet or haven't seen the effects of, your reduction in income. So the banks are still anticipating that there's going to be some negative impacts down the road. And, yeah, they're issuing protections for themselves. And some people may see it as them penalizing the homeowners, yes. But on the flip side, we also have to remember that we have really, really low interest rates. Great time for people to buy if they can afford to do so.
Yeah, well, and if you can afford to do so, you're saying take advantage of, they say inside every crisis is an opportunity. Maybe that's one of the opportunities.
Right. That's one of the opportunities, and I give everyone this advice. A great opportunity for you to try to buy, provided you can afford the home and you have job stability. Because getting a great property with a really low interest rate isn't going to help you if you lose income a month from now or you lose your job. Now, obviously, there's some things that no one can predict, but you have to remember that people who have a lot of money saved, which is not always historically, people in the African-American community are going to be in a better position to keep their homes and, stay in their houses in the event they lose their job and have a reduction in income. So while there are great opportunities, I agree with what you just said, we're also in a situation where a lot of people may not be able to take advantage of the opportunities because of the precautions that they have to take and the limited reserves that they may have. Yes.
Because cash is king and folks are losing jobs and all those other things, which is why it feels like a perfect storm for gentrification, right? Because the people that do have the resources to take advantage of this crisis may not be the people that have historically lived in neighborhoods. So if you're talking...
You are 100% correct.
So what would you tell those homeowners that are in distress? I mean, from the business side of it, as a realtor, who's worked in this space, what would you do if you were that mom and pop landlord? Of course, the renter, we know probably the advice is, if you can pay your rent, but you've got even from the government, from the feds, you've got a moratorium and through the end of the year. Of course, the problem with that is, as you point out, is that rent is piling up. It's not going, away with the tooth fairy. So, when we wake up January 1st, we could owe a lot of money. And at that point, the eviction clock starts running. At the same time, as this mom and pop homeowner, you could be in an untenable position, between a tenant and a hard place, meaning your bank. What advice would you give to families that are struggling right now?
My suggestion to families who are struggling, and whether they're struggling or not, given that we don't know what's coming down the road and that it feels like we've, been going through COVID forever and, been in this pandemic for a long time, we still have things and impacts that are going to occur that we have yet to see, is to save as much money as you can now. If you're in a decent position, don't take that for granted. Save all the money that you can. Don't buy any superfluous items, luxury goods, things like that. Just kind of stack up because we don't know, if you're going to have your job, if your income is going to be reduced, or if we're all going to be locked back in the house come November and December. There's going to be obviously financial consequences from there. And if a mom and pop is in a situation where they can't afford their mortgage, whether it's on an income property, a primary residence, or whatever, a lot of people, Dominique, tend to ignore the problem or stick their head in the sand, or they get paralyzed. And I deal with people like that every day trying to help them. But a lot of times it's too late. People wait until the last minute to try to contact their bank or negotiate something. The minute you realize that you're not going to be able to make your payment, whether it's to your landlord or whether it's to the bank and you are a homeowner, you need to reach out, be upfront, and let them know. And be prepared not just to say, I can't pay, but to come up with some type of comprehensive plan as to how you're going to catch up.
Right.
If you're a tenant with, under COVID, if you can't pay, you will have to come up with a written payment plan of how you plan to pay your landlord, or they will have reason justification to ultimately evict you. And with a bank,
right.
Not all banks are super lenient.
Although the LA Tenants Union advises people not to sign any agreement with, their landlord or whatever until they've had a professional look at it.
That makes sense. That makes sense.
And so, because it's going to be binding, but at the same time, we can't expect, when they say cancel rent, that's all well and good, but somebody's got to pay that mortgage. Diane from LA, you are on with Pila, Gray-Jessie. Welcome.
Good morning. We're having the same problem being landlord owners with a commercial property on a complex, apartment complex in Houston, Texas, and I'm having the same type of problem. Now I'm ready to refinance. I'm at the point of refinancing a balloon payment, and I'm having problems finding a company that would even refinance us.
Well, so this is probably a tough time to get a refi, right, Pila?
Correct.
Well, depending on the circumstances, it is. What specific reasons are you being given for not being able to refinance this property?
Diane, what are they telling you? Why are they saying
not paying?
A lot of companies have stopped refinancing large complexes.
Right. First of all, Diane, I need you to turn your radio off because we have a delay on, so it'll get confusing for you. You'll be hearing what happened 20 seconds ago.
2 seconds.
So the question that Miss Gray-Jessie was asking you is, are they giving you a specific reason why they're not giving you the loan at this point?
Got it. Okay,
is the bank telling you why they're not giving you the loan?
They're not. They're just saying that they're no longer doing refinances for either Houston or for either
Got it.
complex.
So it's a blanket statement. They're just saying they're not doing those anymore.
Right.
And when you
what is she doing?
Is it one specific institution or is it multiple institutions?
It's been across the board.
Oh boy. Yeah, there are some. I'm sorry. Go ahead, Dominique.
No, go ahead. You're the expert.
There are some. Well, just to be clear, I'm not a lending expert. I don't do loans, but I've been in the real estate industry for 20 years. So the information that I'll give you is, based upon my knowledge and my experience. There are some states, absolutely, historically, that have been more difficult to obtain loans in. There are areas that lenders still feel are more risky than others, and there are properties that banks feel are more risky than others. So when I'm asking you the reasons why, yes, it may be a little bit more difficult to do a refinance on a commercial property in Texas right now, but I'm also wondering how far you're going before they give you the denial. Are they looking at your books and your records and they're saying,
we may not be able to drill down that deep right now. But Diana, what I would recommend at this point is that you go and get someone to advocate for you, whether it's somebody like the LA Neighborhood Housing Service. You can call them even though your issue is in Texas, and they can either refer you or give you specific advice. Someone like my friend Marie Deary, who will be on later in the show, who has financial financial advisors of Long Beach, Wealth Management, LB.com, or, even somebody like the Vermont Sloss and Economic Development Corporation, who can sit down with you and go over your situation and give you some specific advice about how to get help. Any one of those, because you may need someone to hold your hand and walk you through the process. And I wish you the very best. A lot of times we just need backup, people that know those applications, know those systems, and know what's disqualifying you or what could get you over the hump. Pila, Gray-Jessie, appreciate your being with us this morning. What's the number one point you wanted people to hear this morning that you can leave us with today?
The number one point that I want to leave everyone with is to prepare. Hope for the best, prepare for the worst. Save as much money as you can. Avoid purchasing unnecessary, superfluous items. And, try to make sure that you have as much savings as you can so that when things don't go the way that we expected, we're not faced with an immediate financial crisis if we can. And the second thing is to immediately reach out for help And don't be afraid to ask other people, even friends, families, for recommendations if you have questions or concerns about your financial situation. In our community, African Americans don't talk about money very often. And as a result, if we have someone that we know who may have resources, we may never find out because we're too embarrassed or too prideful to have a conversation. So have those conversations, reach out, ask for help, and save money.
All right. Well, Pila, Gray-Jessie, thank you so much for being with us. I hope that your business thrives and survives throughout COVID and beyond.
Thank you very much. Have a great morning.
All right, and you as well. We are continuing this conversation all the way till 10 o'clock. The best time to call is right now, 520-KJLH, 520-5554. It is the front page, Total Talk Expression, Radio Free, 102.3 KJLH.